morning and welcome. Patriot Radio News Hour. Joe and Jason wrapping up January. Happy hump day. It is Fed Day. We got all kinds of data today. We got the Treasury blowing up, a huge increase in borrowing from the Treasury. We'll tell you all about that. Obviously, we'll be waiting tomorrow. We'll talk about it tomorrow because it'll be after we're off the air. We'll get the Fed announcement. Listen, here's what we know. They're not raising rates. Right? They're not going to cut rates. They're going to leave rates the same. It's all going to be about quantitative tightening. When is it going to end? Right? Are they going to start the wind down? And then any hints on rate cuts, that is the big thing. We've got Jobs Week. ADP came out much lower than expected. Expected about 150,000 jobs. Ended up just over 100,000 jobs. We get jobless claims tomorrow. And then, of course, the government's job number. We've got a rally in gold and silver, right? Usually you don't get rallies in gold and silver on Fed days, but uh-oh. Do we have more banking problems? 800-951-0592. That is our toll-free number. allamericangold.com is the website. Check them out. Follow us on YouTube, Rumble, all those other social media things, the likes and the subscribes. We love all that. Thank you so much. But Jason, a ton of data. We had earnings out from Microsoft. We had earnings out from Alphabet, a.k.a. Google. Not great. Matter of fact, the NASDAQ getting hammered this morning. The Dow's up a little bit, but that's because Walmart announced a 3-for-1 stock split. So Walmart kind of saving the Dow, at least for today anyway. Of course, Walmart and the tech stocks is pretty much Wall Street to begin with. We'll hear from Amazon and Meta, a.k.a. Facebook, a little bit later, but not a great start to earnings season. And then probably the thing that really got the markets concerned, the 10-year note, 3.95. I mean, this is just not supposed to move this way. Had to do with problems in the banking industry. New York Bank Corp, they're one of the banks that are over the $100 billion cap. There's 36 banks total. That's how small the banking industry really is. Because for a lot of us, like, well, $100 billion. I mean, that's like nothing, right? What's $100 billion? Big deal, right? $100 billion now. They throw around $1 trillion like it's no big deal. They're the 34th largest bank in the country. There's only 36 banks total that have that moniker of $100 billion or more. So I guess we'd call this, fitting into that regional bank. Jason, a surprise loss. Matter of fact, this is, the typical story we get with banks where they're telling us everything's great, everything's wonderful, our balance sheet is strong, and then they posted a huge loss, unexpected. Matter of fact, everyone thought they were going to make big money this quarter, a huge loss for New York Bank Corp. They took their dividend from 17 cents down to 5 cents, but people are starting to say, this isn't going to be enough.
It sounds like some treasuries came due somewhere there, right, Joe? And we mentioned last year that when we get into January of this year and all 2024, a lot of these banks are going to be upside down with these assets. And, of course, with the commercial-backed real estate also, that could be coming due and flipping. That's also supposed to happen. And it's really bad this year, next year, in 2026, even into 2027. So we got with these higher rates, which I don't know if they're ever going to go back down to zero in the near term. I think you'll see more banks like you're mentioning here in the coming months.
Yeah, a lot of people say, management had previously had said that asset quality was strong. something has clearly changed in the tone. Yeah, you know what changed? I'll tell you what changed. A bunch of their loans came due, and they were upside down. And guess what? It looks like some of them were so far upside down, Jason, they just had to write them off completely. A material negative surprise is what the markets are calling for. But here's what happened. Because of this, everybody the Treasury market started selling off, like I said, down to 395 because they're saying this is going to, again, force the Fed's hand. Remember, we keep talking about March. That's when SVB went under last March. Right? Are we setting up again for another one of these marches where, oh, my gosh, I don't know how we didn't see it, but we got caught off guard, and here's all these emergency programs. But they're saying without the bailout fund, regional banks are in crisis. And again, the Fed has already said that thing ends March 11th. So, Jason, here we go again.
Right, and remember, it was about March when it was 2022 when the Fed finally started raising rates, and they said all of 2021 there is no problem, there is no inflation problem all through 2021. How many banks were loading up in March of 2021, and who continued to maybe load up on some assets in early 2022, and then that makes March kind of maybe an annual situation for a few years, Joe. It's a good observation.
Yeah, we'll see how it all plays out when we get back. How much more borrowing did the Treasury said they needed? We'll tell you about that when we return. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Wednesday. A quick look in at the markets. The Dow's up 50. Like I said, Walmart, big announcement, a 3-for-1 stock split. The S&P down 35. The NASDAQ down 250 points. Gold's up $17, just below 2,050. Silver is higher as well, 23.30. As we talked about, the 10-year note, 395. As again, the jobs number came in light, but the New York bank shares, that really is the catalyst of the shocking loss there. And what does that mean for the banking industry heading into what's coming up in March, right? That's what we're watching out for. Being diversified is the key. You can't have buckets of money sitting in your bank. You just can't. You just can't do it, right? That's why we bring Joey on every week, right, from Northwestern Mutual. Why? Because they're not a bank, right? They're not, right? Who's a bank? Charles Schwab's a bank. Yeah, I know a lot of people are like, what? Yeah, Charles Schwab. Oh, yeah, Capital One. Yeah, they're a bank, technically, right? Goldman Sachs, right? They're all banks. You got to stay somewhere outside of that. Check out why refi. Right? Up to 10.25%. Listen, it's not correlated to the stock market. We don't know what's going to happen, right? We speculate, right? We're watching these things. Everybody has an opinion. Is inflation going to roar back? Are we headed into a hard landing, a soft landing? What's the Fed going to do? Is quantitative tightening going to end? Are we going to go back to quantitative easing? Is the banking crisis coming back? Nobody knows. But this is something where you can have a chunk of money where you don't have to worry about it. It's going to look the exact same. You can turn your income on. You can turn it off. You can compound it. You do whatever you want. There's no fees. You got to have a minimum of $50,000, but it's not correlated to the stock market. It's not correlated to the Fed. Great rates of return. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call 888-YREFI-24. So, Jason, now we hear from one of our regional banks, right? We got trouble here, slashing dividends, big losses, and scaring again. Okay, if this happened to them, What are the other banks going to start saying? And then at the same time, the Treasury today announced they're refunding another $121 billion. Specifically, the Treasury will sell the $121 billion in bonds in its quarterly refunding auction next week in 3, 10, and 30-year notes. $54 billion in 3-year notes, $42 billion in 10-year notes. By the way, that's $5 billion more than December on the 10-year notes. The 3-year notes, $2 billion more. And the 30-year notes, $25 billion. That's $4 billion more than in December. And again, this is the Treasury just trying to be able to say, listen, we want to keep, $750 billion in the checkbook, but we can't because we keep going into debt too fast, right? The checkbook can't stay where we need it to stay, so they have to increase it. And then they said the auction sizes going forward, 2 and 5-year notes are going to go up by $3 billion a month. 3-year notes by $2 billion a month. 7-year notes, another $1 billion a month. The auction sizes for 2, 3, 5, 7-year will increase by $9 billion, $6 billion, $9 billion, and $3 billion, respectively, by the end of April. Most people were expecting the Treasury to say, hey, we're not going to have to, redo any more increases in the size of auctions. They didn't say that. Instead, they said we don't expect to boost for several quarters. Now, we know next quarter, right? April's tax time. So we know April's going to, that quarter's going to be okay, right? There's extra money there. And we anticipated the summer quarter, the same thing, right? It's still coming with tax money, probably okay, but they left the door wide open to say, you know what? It could be December again, right? It could be early next year, but essentially the Treasury acknowledging, Jason, the pause in increase in auction sizes is just that. It's just a pause. They fully expect this number to keep going up.
And it might go up, Joe, because we have geopolitics. And if this, you got the Republicans telling Joe Biden he's a weakling, and then you got the Biden administration saying, well, we're going after Iran at a time of our choosing. You call someone a wimp, then they have to punch someone, right? Joe, if there's a war in Iran, then everyone's going to invest in the military, the stock market. There'll be this big little hump in investments and spend. And we got to spend at all costs because they'll have pictures on TV of caskets with soldiers in it and family members crying, and it'll spend at all costs, Joe. And the market crash that'll come behind this thing because something will blow up. The stock market will then crash after all that spending, and it'll be blamed on whatever, Iran, Syria, the Palestinians, the Ukraine war, whatever else happens. But Joe, I think this is looking very likely to happen this year. I mean, it's the rhetoric is getting thick. They're preparing people to get ready for this.
It's interesting as we're watching the markets today. Like I said, Walmart kind of saving the Dow for today anyway. But how caught off guard they were by New York Bancorp. I mean, how can this be? Right? I mean, everybody's supposed to be watching these banks, and everybody's supposed to have a good idea. And, of course, I get it, right? The analysts are trying to, it's not my fault because, well, look at what they were saying. Right? The CEO and the CFO were saying they got a strong balance sheet. And next thing you know, they're taking massive losses, and that's with the Federal Reserve's help, right? Because obviously, right, they have these loans there sitting there, and this program comes to an end on March 11th. It's going to be very interesting, the comments from Jay Powell this afternoon. We got gold. We're going to sit there talking about, okay, are we going to hit new all-time highs again here? It depends on how dovish he gets. I don't know. I got no guesses. There's going to be no rate hike, no rate cut, right? They're going to leave rates unchanged. It's all going to be talk about winding down of quantitative tightening. And you look at what the Treasury just announced. Think about that in itself, right? $20-30 billion more a month in auction size that really heightens the need. And they said that this will be done by April. So by all accounts, I'm anticipating the Federal Reserve to start the plan to wind down quantitative tightening. But I think any mention of cutting interest rates, I think the markets would really seize on that.
Yeah, and I think this is not the only bank we'll be talking about very soon, Joe. It's the only one they're admitting to. I mean, I think all these banks are on the teetering on the edge completely, Joe. So this is the beginning of another round. If you look at the bank closure run to the 2008 crash, it started with a couple, then a bunch more, then suddenly hundreds were going down. And I think at the end of it, there was like 500, 600 banks between, I think, 08 and 13 that all went down. Hundreds, 500, 600 banks. We're at the beginning of that. So, yeah, the bank you're mentioning today, Joe, the next few months, we could have 5, 6, 10 of these guys going down. And they'll have a cover story. They'll pointing the fingers at everyone but themselves. Traditional banking as a whole, Joe, is coming down really badly. I think in the end of this business cycle, I think the traditional banking is going to just be obliterated. You're going to have big, massive banks, like you've said for years, and there's going to be a graveyard of small banks at the end of this thing. There is just too much going on technologically for it to not go down.
This is not a small one. That's, if this was like a bank with $5 billion in assets or something like that, not a huge deal, but this is still one of those banks that over that $100 billion level that we've been worried about. And now when we're watching all of this, it's going to be interesting to see. We'll find out late tomorrow. Did the bank bailout fund rise again, right? This thing has been really escalating. The Fed now had made it less attractive. That's going to be an interesting number if that continues to rise. And then the need to avoid a hard landing, I think, is now even more important, because if it is like this, if rates stay where they are, we look at what's going on with commercial real estate. Let's go to residential. Residential, when the rates kind of came down, we got a little bit of a pop in home sales. That all ended this week. Big drop. Home purchase sales down double digits, and it's just affordability. So housing, like I said, I don't think price is going anywhere, but there's no housing boom going on. In this commercial real estate sitting on these banks, it's going to be something where I think the Fed's going to feel pressure. Man, we can't, layoffs are starting to tick up. Today it was PayPal announcing 2,500 job cuts, right? Google wasn't great. Microsoft was kind of right? And now, is there going to the need to keep a recession at bay, to lower these rates to help these banks that are struggling and keep the economy going? Because obviously, if there is a slowdown, right, if the economy starts to just waver a little bit, is that going to be enough to push a lot of these banks over the edge? Because my guess is, like you said, Jason, these guys are the first ones to say, we kind of got pushed over the edge. And my guess is there are hundreds of banks that are right near that edge, and any little push could start it in motion, which I think is why you're seeing the 10-year note, the yield drop so much today, is because they're like, listen, the Fed's got to save them. I don't know. We'll see what Jay Powell says today.
And there's a couple of frames of mind, especially at the banks at the level you're talking about, that, who wants to admit that they're failing first of all, there's probably a lot of pride still in that sector. But then there's the other way of thinking is like, well, the first one to admit might be the first one to get some help. I think last year kind of told failing banks, well, if you want help, you might want to be early to admitting your failures because, Silicon Valley Bank got bailed out and the other ones, they didn't fare as well, did they, Joe?
Well, it's going to be, could very well be, but this is kind of what we're, reading into the tea leaves here about the action that we're seeing on Wall Street this morning because of this. Like I said, ADP, they were expecting 150,000 jobs to be created. The number came in at 107, so well below expectations. The biggest mover in jobs, leisure and hospitality, only 28,000. And that's been a weak spot. That's normally a number we see, in that 50, let's say 40 to 60,000 range. We didn't get that. And then the other big mover, obviously, there was a good jump in construction jobs, which I don't think we normally see this time of year. But everything else was pretty flat in the jobs market. So we'll continue to watch. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. By the way, did not know this, but New York Community Bank Corp, they were one of the banks that purchased the deposits of Signature Bank. So you had Silicon Valley, right? That was the one in California. Signature, right? That was that one. Remember, Barney Frank was on the board of that and had to do with crypto and all that. New York Community Bank Corp got their deposits a record down day, down 45% right now after reporting a surprise loss. Right now, they're hoping that this is an isolated event, Jason. And listen, we should all hope for that, right? I don't like basing my financial well-being on having to hope on something. This should be known. We should have known about this. This is something that, once again, this market continues to just all of a sudden, surprise, right? So here was a bank that was allowed to take the deposits of another failed bank that now turns around and says, oh, wait a minute, and now we've got a problem.
It's a corrupt, failing system, and in some ways I do root for them to fall, Joe, because it's going to happen in a major way. So I'm always a fan of if it's inevitable, which it sure looks like as months and years go on, this is inevitable. Why not get it over with? Why not get this thing moved to where the next fraudulent, corrupt system is going to be set up to kick the can down the road further? This is why I talked about the war in the Middle East coming. This is they've got it all set up. They got it all set up. Maybe we'll talk about a half empty cup of Joe with Chris Lewis. I'll play a clip or something. But this is all a timed event. Sometimes I like to go with you, Joe. Which these guys kind of don't know what they're doing. They just have no idea. But more and more and more as I kind of go, I'll lean that way. These guys are kind of dumb. Then that always comes back to the other ones. Yeah, you know what? They know exactly what they're doing. They have their finger on every industry. They've bought into every single thing on this planet. And when their schemes start to see the light of day and people start to wake up, they need to change the story, right, Joe?
Right.
Create a war, create a virus.
Think about where we're at right now. We had, let's call it 5% GDP in the third quarter. 3+% GDP in the fourth quarter, if you want to believe the numbers, right? That's what they said. We've got a historically low unemployment rate. We've got the second worst budget deficit of all time. And really, throw COVID out, right? 'Cause, when they scared us all to death and shut everything down, it's the worst budget deficit of all time. And these banks are having problems. I mean, what happens? What would happen if the unemployment rate goes to 4.5% or 5%? Right? What happens if GDP goes to just 2% or 1.5% or heaven forbid 1%? Does this push even more of them over the edge? Right? It's hard to fathom. Why would banks be having these kinds of issues, and with all of this seemingly fantastic economic data? Now, is this one bank enough to get the Fed to cut rates? I'm going to say no, right? This isn't enough, right? We would need to see several more banks start announcing they've got problems, Jason, before we'd see that. That's just my opinion.
Yeah, I agree with that, and we'll see. Maybe a few banks don't do it, Joe. They were raising rates last time. They were raising rates. The banks were failing last year. They rose rates further. So, and they did pause later in the year. So I guess there was enough of a ripple in the water. But I could see several of these things go down, especially if you listed the banks that have $1 billion or more, and this was like at the bottom of that tier, 34 out of 36 or something you said. So I think you can see 3 or 4 of those fall at the bottom of the list, not a problem. You get one that's maybe 15. Yeah, okay, maybe a rate. Yeah, do the quarter point and see what happens. But I really believe the Fed wants inflation to be at a certain place, and I think 2% is in the past. And so I don't think they want 9 on their fake numbers, but I think they're okay if it goes back to 4 or 5. That means they don't have to lower the rate. It doesn't matter what emergency is going on. Yeah, we know that there's a war going on over there, but the CPI is 4.5%. It's gone up. We won't raise it on you, but at least we'll help you out by not we can't lower it for you to help you out, but at least we guarantee we won't raise it. I mean, that's the whole point. They're at 5.5%, right, Joe. They can handle 4.5% or 5% without raising. I think that's where it could inevitably go, Joe. Is hey, banks are failing, but we got emergencies going on.
It's going to be
we'll just raise it on you.
It's going to be interesting to see. I don't know if at 5 that they can't raise. I don't know, right? But to your point, if there's a banking crisis, then they're definitely not going to do it. I think they're very comfortable. Anything in the 3s, they're fine with. And of course, they can always, our favorite number, right? The super duper, don't count anything, nobody looks number, that's still at 2.8 or 2.9, right? And somehow do it. But you're right. This is at the lower end of the $100 billion or more banks. There's only 36 in the country. They are number 34. To give you an idea, because you mentioned, what if it's 15 or 6? BMO, and not that BMO has a problem. I don't want to spread, they're number 15 at $293 billion. American Express is 16 at $244 billion. Just to kind of give you an idea, this bank is number 34 at $116 billion. So
I've been seeing those BMO commercials on TV. They're trying to get that money their way, aren't they? I wonder how many bank commercials will have at the Super Bowl. Hey, bring it here. You don't need that other bank. You need your money here. I got those BMO commercials. I didn't even know I never even heard of BMO. But here's the guy in the nice clean shirt, and his little desk shows up in the middle of the street, starts talking to people. Yeah, we got mini banks for you now. We're good. Yeah, we're awesome. Bring your money here. So, there's going to be some competition. These banks start to fail, Joe. That's for sure. It's survival of the fittest, I guess.
Yeah, well, I mean, go to like the 100th largest bank. They've only got $18 billion in assets. So that just tells you, right? At that level, probably $100 million loss or $200 million loss may be enough to take them out, right? Because they're not that big. I mean, so it tells you how small are the other 4,000 banks, right? Patriot Radio News Hour. We'll be back after. Get it? Well, you can. Patriot Radio News Hour, Joe and Jason, our toll-free number, 800-951-0592. You know, yesterday we ran 20s. They went fast. Figured that they would. Today I've got $10 liberties. Get them while you can at $1,100 a piece. $1,100 a piece right now. Gold's up $18. Let's call it $17. 2,049 right now. $10 liberties. These are the older 1866 to 1907 half an ounce. Here, $1,100 at 800-951-0592. The World Gold Council saying that total gold demand hit an all-time record high in 2023, and they expect a new all-time record high in 2024. Get it? Well, you can. Overall gold consumption, this is crazy, 4,899 metric tons. I mean, gold supply, mine supply, isn't even 4,000 metric tons. So this is a huge number. The landscape is appropriate to see continued central bank buying as well. They said central bank buying in 2023 just missed the all-time record high set in 2022. 1,037 metric tons. Remember, a metric ton is 32,150 ounces. That's a metric ton. You know, so you're talking 1,037 metric tons that missed the all-time record set last year by only 45 tons. And Jason, that had more to do with Turkey had to sell a big amount, but they started buying at the end. They expect another huge year in gold as far as central bank buying goes. India is expected to increase its gold purchases, and the Indian consumer expected to also put its own stamp on things. And the World Gold Council says China continuing to lead the way here. But gold demand, I mean, it's incredible. I mean, we're going to be talking, World Gold Council saying, hey, don't be shocked. We could hit over 5,000 metric tons of gold demand in 2024.
And at some point that'll stop, not because these nations are not wanting to accumulate more. It'll be because there's not anything to accumulate if you're talking the physical side. And I don't know, Joe, is this all physical, or is some of this sort of paper demand? Because any governments out there holding paper contracts, when things happen like what we're looking at, it's going to be the physical demand. And you can't have record gold purchases if there's not physical supply.
This was straight physical. Paper contract. It's up like 750%. I mean, some ridiculous number on the paper side of things. But again, when we start thinking about these numbers, I know silver's going to have it. Here's the metals we know are going to be shortages. Platinum, going to have a huge supply deficit. Silver, a huge supply deficit. Gold looks like a supply deficit. Obviously, with high gold prices, right, you get some, the scrap tends to get better. But I don't, can you get 1,000 metric tons of scrap? I don't think so. I mean, I don't know. But it definitely is well above the mine supply that's coming out of the ground. And this is one of those things where if things go wrong, right, do we see even more buying than what's anticipated. Right now, I think everybody's kind of penciling in kind of this soft landing, and yeah, maybe there's a few bumps in the road, but it's not going to be anything horrible. But if we get these bumps in the road, we could see numbers far bigger.
That's right. And you get a little geopolitical emergency going that's a lot bigger than it is now, and the increase will go higher until supply lines start to break down, right? So, yeah, you can't have record demand, Joe, with what's getting ready to happen. There's just only so much gold that can be physically traded back and forth before these, like, look, we're mining. What is this? Was Scotty? You were talking Star Trek yesterday. I'm giving it all we got, right? There's only so much you can get them, right?
I mean, at $2,050, believe me, anybody that can get gold out of the ground is doing it, right? I mean, they're doing it. I just don't know what we none of us know, right? We don't know what's going to happen. Be diversified. The number one thing we get, I would say, from the vast majority of our listeners when they start buying gold, it's usually the same. Man, I should have done it earlier. I wish I had done it sooner. I wish I had get started today. Right, the $10 Liberties at $1,100. I mean that if you bought two of them, that puts you at $2,200. Gold's $2,050. I mean that's really close to spot. $150. I mean that's single digits here. This is a great value. Take the time to put it away. It's so easy. If you've never ordered before, we're not like everybody else out there. We got a great sales staff. The girls will answer all of your questions. They'll do all of that. Or you can just tell them, hey, I'd like the special. And they'll ask you one hard question. How many would you like? I mean, it's just kind of that easy. Patriot Radio News Hour. We'll be wrapping it up right after the break. $800-951-0592. Joe and Jason, the markets, the Dow's now in negative territory. Walmart not enough to save it today. The S&P's down 50. The Nasdaq's down 250. As Microsoft, it wasn't terrible. Microsoft was okay, but not good enough. Google just wasn't there, right? The revenue, the ad revenue, not very good. Well, it was still good, but not good enough for these prices. Has it under pressure. But the news of the day, ADP jobs was light. We're waiting on the Fed. But New York Bank Corp, they got the deposits of Signature Bank, announcing a huge fourth quarter loss that seemingly caught Wall Street by surprise and has reignited some fears. I'll say this bank by itself, not enough to get the Fed to cut rates. The question is, how many more behind them is there, and what effect does any hiccup in the economy going to have? You got to remember, listen, all this commercial real estate, we have more due in 2024 than 2023. We've been waiting for this and waiting for this and waiting for this. And I know it felt like a long time, right, since March and April of last year. But really, I mean, it's been 9 or 10 months. It really hasn't been that long. And it's been a favorite trick of all these money guys. Well, let's paper over it. Let's give them a bunch of money and let's pretend it didn't happen versus actually fixing anything. And by fixing it, right, you got to let them go under, right? That's how you fix it, right? If you made mistakes, if you made bad investments, you need to pay the price just like everybody else. But again, when they do that, then you realize the whole system was a house of cards. And that's why, people are putting gold away. It's a hedge. You're protecting yourself. It appears that we're going to have dollar weakness in 2024, so gold's a great play. $10 Liberties, $1,100 today at 888-951-0592. Take the time, put them away, keep adding to your portfolios. And let's hope we don't listen, the best thing that will happen as these guys are isolated. Unfortunately, that really kind of doesn't make a lot of sense, does it? Because all these banks, they buy the same stuff, Jason.
Can't hear me, so.
Nope.
Can you hear me?
Yeah, there you go. Okay. I couldn't hear you.
Oh, there I am. Got to get those channels on. No, I lost my train of thought. I'm sorry.
That's all right. It's live radio, right? That you start talking and they're like, what happened? But yeah, I mean, all of these banks buy the same things. So is this bank really isolated? My guess is probably not. Now, did they just do a worse job, or maybe did they have a couple of deals that were really, 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 really bad? I don't know, but my guess is, Jason, there's other banks that are going to be close behind.
Yeah, that's what I said last segment. I think we'll see. And I don't know what timing of this year it'll be. The report that you have today is looking like one's coming pretty quick here, possibly. But I mean, it wasn't like S&V, Silicon Valley, man. You reported that, and by Friday they couldn't even get their loans covered. So I guess we ain't there yet, but I think it's coming, Joe.
We'll see what happens. Stay tuned. Get that gold put away. Make sure you got your assets protected. Jason and I, we're coming right back with the half-empty cup.